I know you.
We call it, we call it an uptrend. Then we have a downtrend and we have a consolidation market. So how you can look at this an uptrend market, this is how it works. This is how uptrend market works.
I just
Okay,
wanted to know
fast.
how how many girlfriends you get? There's only one now. Which one is how many girlfriends I get? That's what they call you. Who is
Please can
it?
we mute our mic?
Just like say when guys they call you, just say they call you. Just they call you. Yes, they call me. Say
Àwọn
only
bẹ̀ di
one girl.
ya
They
sọ̀rọ̀
they
láyé
have
ẹ̀dá.
Oh,
no go.
I'm from
What
Lebanon.
I like tough now if you think that you have something that you feel that hidden from it, like
Okay. So we have the uptrend. This is how the uptrend moves. This is it. This is it will make a low. So that's this low. Then when price is moving, it's have to take off this high there's here. So once you take off the high, you notice that the price have is on an uptrend because it's have taken down this. So this low that is going to make here will not be able to break this low. So it can stop at this level and then push back up again. This is how you can fully determine that price is going up. So what you have to do is to wait for price. Once the price needs to retrace back, because you have to come back to the same low that it just break out from, and then do the same thing, push back up again. So this is how you can identify that our price is going up. This is an uptrend. So you will look to buy once the price retrace back to this level. This is when you can take your buy entry and then probably take your TP above this next high or leave it to run because the trade is going to break this next high. So following the move also, you have to then wait for price to come back to this same zone, this next high, and then make the same rejection. So you have to wait for, if you want to take another position, you can take, or if you want to step out and then wait for another entry, and wait for entry when price will trace back to this high, which it has broken out, and then do the same thing, shoot back up again. So always buy once price is retracing back to the next zone, then always buy one price is tracing back to the next zone. So this is acting as a resistance zone here, and this is acting as a support zone. So resistance zone breakout. So once the resistance zone is broken out, it will eventually turn to a support zone. So once price come back to that exact zone that it has broken out before, what will happen? It will shoot back up. So you always look to buy when price is at this level, because once a price goes up, it will definitely come back down again. Anything that goes up will come back down. So anything that goes up will come back down. This is it. You buy when price will retrace back to the place which it have, the area which it have broken out from. And you buy when price will break out of this next high and then retrace back to that same high which it have broken out from. This is when you buy, and this is when you can determine that market is an uptrend, price. There is an uptrend price. Price is going up. So that was going up. This this is an uptrend price. Then a downtrend is opposite of this. So market is going down as opposite of uptrend. Then we have the downtrend, price will create a high, then come back here, make a low, try to retrace back to the same high, but it can't break out this high because if it break out, then it has changed the direction. It can't break out this high, it will have to retrace it. At times to give us something like an equal up, which is called a double top, and then comes back down, break this low. This is when you determine that price is going down. So what price need to do is to retrace to this same high, which it have broken out from, and then what we do, it will goes back down again, and then retrace back to the same high and goes back down again. So this is when you can determine that price is on downtrend. Price is on downtrend. So you sell at this zone. You sell at this zone, and then you sell at this particular zone as well. So you sell when price is retracing back to the high, which it have taken out from. And then your TP, you can target the next low or you leave it to run and break out. Then you always sell again once price is have broken out this high and then retracing back to that same high. Because once price make this kind of impulsive move, it's going to make a correction. So to correct it and then make another impulsive move and then make a correction. Then that is how price move always make an impulsive, a correction, impulsive, a correction. And then that is how it moves uptrend and downtrend. So when you can determine a downtrend is when market is sloping downwards. So this is an uptrend. This is an uptrend. This is an uptrend, and then this is a downtrend.
Sam, can I ask a question?
All right, go on.
So in the uptrend, I understand if you buy it at this price, you will sell, you are likely to sell it at a higher price later. But
I didn't get the question. Come again.
in the uptrend,
Okay.
if you enter trade, if you buy it at that peak that you placed there, the price is still
Again.
up, so you will
Yeah.
sell it at the highest price.
Yeah. What you have to do is to wait for price. I will come back here. You buy it at the peak price when price is retracing back to the next high, and then push up. You can sell it when price is retracing back. But to be in a safer side, you need to allow the price to retrace back to the next high and then continue the buy because price is going uptrend. Then this downtrend, you allow the price to break out the next low to determine the price movement, whether it's going down or not. Then you sell when price is tracing back to this exact zone, which it have broken out from, to the next high, which it have broken out from, and then goes back down again. Sell again when price is retracing back to the next high, which it have broken out. Because once price have broken out a particular zone, it needs to test back to that zone to test whether the zone is strong enough to hold it or not. So it need to go back again. Once it has broken out a support zone, and then it need to come back again to test that same support zone that it has broken out from. Then before continuation, for price will reverse to give you a candlestick pattern. That's why I told you that today you can know about 4 to 5 candlestick patterns that you can identify in the markets. So when it's at this particular zone, it will give you a candlestick pattern that you can identify that will push the price up. That will show you that price is rejecting and then push the price up. So when it's coming back again, it will give you another candlestick pattern here that you can identify that will push the price up again. And when it's coming back down, it will give you a candlestick pattern that you can identify at the top here that will bring the market down. It can show you evening star here that will bring the market down. So it can show you a candlestick pattern at the top that will bring the market down. Then telling you that the price is about to retrace back to this is that high which it has broken out from. And then once price come back to this zone, what you have to do is to give you another confirmation candlestick pattern that you can identify whether a hammer candlestick pattern, a morning star candlestick pattern, a bullish engulfing, whether a dodgy candlestick pattern. Then after a dodgy candlestick, the next candlestick that will follow it will determine the direction of the price, which can be a green candlestick. So following it, you know that the price is going up. What you need to do is to just buy. Once you see a hammer candlestick at this exact zone, what you need to do is to buy instantly. Then once you see a dodgy candlestick pattern here, what you need to do is to wait for the next candlestick pattern. So if you are using a 15 minutes time frame to watch, you need to wait for extra 15 minutes to determine the direction of price, whether it's going to reverse or it's going to break that exact zone. So once it gives you something like a green candlestick pattern, what you need to do is to just place a buy order that will push the price up. So we have this as a bullish trend. This is downtrend. This is an uptrend, and then we have the sideways trend. The sideways we see markets making this kind of move. Once you see market making this, not breaking the high, not breaking the low, not breaking, just stay out of the price, not breaking the high, not breaking the low, come back here, not breaking it, go back here, just stay out. Allow price to break out each of the above. What you have to do, this is up. You see the price not doing this and then coming back down again, not breaking this low. So what you need to do is to just mark out the high, which is producing, and mark out the low, which is producing. So what you have to do is to be patient enough to wait for price to break out of any of the zone. So if price eventually comes back, rejects here, goes back up and break this zone, what you have to do is to wait for price to come back to this exact zone low, which it have broken out. This is when you can look for to buy. This is when you can look for to buy. So what you have to do is to wait for price to break out of this zone, because this is a very strong zone. It's just doing a sideways, consolidating on that particular zone. So what you have to do is to just mark out the high of the price, mark out the low of the price, and then wait for price to break any of them, whether the upside you buy, downside you sell. So if price eventually do this, what you need to do is to buy when price is tracing back to this particular zone. Is to buy here once price is tracing to this particular zone. So eventually price goes, let's say they didn't go back up to break that, and price just continue and break this low. What you have to do is to wait for when price to retrace here. And when price is going, it will not just go straight. You have to create something like a small move, like this kind of move, and then goes back to this particular zone. Once you get to this zone, what you have to do is to give you a candlestick pattern that you are familiar with, whether the evening star candlestick pattern, whether the shooting star, whether the bearish engulfing, whether the dodgy candlestick that will shoot what they want to see a dodgy candlestick. What you have to do is to wait for the next price to form, then that will push the price down. That so you either not take out all these candlesticks, at least you can be able to identify them. Once you identify them in the price, very simple, you'll be able to trade profitably. So what you have to do is to be patient enough to wait for price to get back to the zone which it has broken out from. Then give you a candlestick pattern that you're familiar with. What will happen? Price will start shooting back down. See, the price will start shooting back down. Once you see a consolidation market, just mark out the high, mark out the low, wait for price to break out any of the above. If it breaks to the sell zone, then wait for price to retrace back to that exact zone that you mark, because price will definitely get back there. So what you have to do is to wait for price to get back to that zone, and then you sell instantly. So once price retraces here, what you have to do is to wait for a sell. Is to wait for a sell order here once price is here. So what you have to do when analyzing, you need to determine whether this price is going up or going down before you can be able to identify how to analyze your price. If the price is going up on the daily time frame, what you have to do is to mark out the next high, the next low. So once price get back to 1,000, it will definitely goes back down. Okay, let's get this. Let's start with this. Okay, this is currently Euro GBP. Euro GBP, Great British Pounds. So you notice price gave us this move and then started going down. Gave us an evening star candlestick here. It's an evening star candlestick that pushed the price down. Then comes back to this low that it's made. So this low is acting as a support level. Why am I marking out this low? Because price hits back here, goes back up, it hits here, goes back up, come back to that exact zone, hit it again, and then went back up, came back to this exact zone again, hit it, went back up, and finally broke it. And when it broke it, what happened? It needs to come back to retrace to that exact zone. So what I'll have to do, I can use a paste or I can use a line. So I usually use a triangle. So this triangle, what I have to do is to mark out the next low and then mark out to the next low that it's made. So this is a low. I connect this low to this low. So when I'm connecting this low to this low, which it means that once price get to this one, it will reject, price push up, went to this high, came back again to test this exact zone to know whether it's strong enough to hold it. What's happened? Price shoots up and then break this. It break the high, came back again to retrace, and then the buyers are not strong enough here to push the price up. So what happened? The sellers took over, and then this is the final breakout. So price break, and then retrace back, price retrace back to this up, and then what's happened? Gave us a fake out here, and then sell back to this thing, and then price go back again, give us another fake out, and then what happened? Sells back again. So this is a very strong zone that price need to come back and then continue selling. What happened? Price came back again, tried to go back to this particular zone, and what happened? The zone is pushing it down. So giving us our evening star here again, and then giving us our evening star here again. So what will happen? We'll have to mark out this zone. This is another area that price is rejecting. So marking out, I'll have to mark out connecting this to low to this low. This is the current low. No price I've gotten this, no price I've made this low after this low is being made. So price came here, rejected, came here. So price wasn't able to break, haven't break this low yet. Instead, what happened is I've taken down this other low that I'm going to mark out. This is a low that it's make here and then took it down. It took down this low. So telling us that the price can still come back up. So I cannot here. So telling us that price can still come back up because it came back here, give us a look, a top, is a double top, and then we back down. Coming back to this low, see what is doing. Do you understand the kind of candlestick is putting here? If this candlestick is able to close this closing in 2 hours time, look at it. This is an engulfing candlestick pattern that is giving us here. You see, this green candlestick is trying to swallow this red candlestick, telling us that price still have more rooms to go up, maybe to test back this particular zone. And then what's happened here? It came back here, give us another one here that push the price up. Came back here, give us evening star candlestick, push the price up. So haven't gotten back to this zone to test. So it just went back. And then price is trying to push back up. If price is able to close this zone, close like this, so with an engulfing candlestick, it's giving us more minds to buy because price is going up. So what I'll have to do, I'll go to, after I'm done marking out this, so I'll have to mark out the next high that the price I've made, which is this high. Once I mark out this high that the price made here, so what I'll have to do, I'll go to the 4 hours time frame. So this 4 hours time frame, this is 4 hours time frame. After I'm done in the daily time frame, I'll have to go to the 4 hours time frame. So this is our 4 hours. So this 4 hours time frame, see what is showing us here. This is the previous low that it's made. It gave us a hammer candlestick. This is a hammer candlestick that it gave us here, a green hammer. So push up and then comes back down again, give us a dodgy candlestick. And I told you that immediately you see a dodgy candlestick, the next candlestick that will follow is to determine the direction of price, whether the price is buying or whether price is selling. So he gave us a hammer candlestick, and then the next candlestick that touched this particular zone is a dodgy. So dodgy means an indecisive, neither the buyers and the sellers are in the market. So what you have to do is to wait for the next price to open. So and close. This price open and close with a bullish candlestick telling us that price is about to move up. So that is why price continue moving up with the momentum candlestick came back up. So and then price came back again to retrace. This is a massive rejection here, telling us that price is rejecting this particular low here. And then price came back again. This is a double bottom package that is giving us here. So price came back here, push up again, come back to this exact zone again. What happened? Reject again. So this is an active zone. Price is trying to reject back to this next high. So if you go to the 15 minutes time frame, you notice that this zone, from here to here will be very wide. So this is it from here to here. Okay, this is a 15 minutes time frame. We see it give us a double bottom here and then push back up, trying to create a high, what is it called? An uptrend. If you notice, if you see what I'm saying here, you notice that this is the low that our price made, and then price came back to this low, push up. Price came back to this low, wasn't able to break this low. If you notice, more price have broken out this low. So what happened is push up. So push up to this next high here that it's made, and then broke out this next high. Try to come back to this particular zone. Then it gave us another low. And if you notice, this low is not lower than this. So what happened? Price came back again. Break this next high again, which it has given us. So price break out this high. So as it break out the high, what happened? If you can see it left in the trade, it broke out the high. What happened? It came back again to that same high that it broke out, and then it started shooting up, telling us that price is on an uptrend. So I'm not just drawing it. You can see this in the markets, the way the price is moving. It's showing you that price is on uptrend. So what you need to do is to buy. So what you need to do is to mark out this next high, which it has given you here. This is the next high it has given you. It has produced, and then came back here, give us a body candlestick. So price is going up. It's showing us that price is on an uptrend. So what I'll be looking out is to buy. I'll always look to buy when price traces back to my previous high, which it broke out from, and then I'll sell, because this is a buy giving us an equal low here. If you notice what happened, this previous low went up, taking out this high here. This is a small high that it made here. Take out the high, try to retrace back to this low and break it. So if to say it broke out this low, I would have been looking for a sell opportunity. So instead, it's stop at this particular area and then give us a candlestick pattern that will know this is an engulfing candlestick. So this is a monster candlestick pattern that push the price up. So price came back to this zone, try to retrace a bit, but the buyers are still going aggressively. So price push up, push up, push up. Went up to this high, and then as it goes to that high, what happened? Price retraced back to this same zone which it broke out from. So as it retraced back to that same zone. So if to say you entered, you see this kind of move, and you entered a buy opportunity when price retraced back to this zone. So and then you take about this is it, because price cannot go back to this particular zone, and then targets to this next high. So if you are taking it to psychological level to psychological level, this is a 2 ratio. This is a 2 ratio trade here. So taking out, if you buy from here, let's say you buy and your stop loss is below here, because price need to come back here to test. And then what happened? You target this next high that is here. What happened? Price will eventually reach here, shoot back up again to the next high. See that? So this is how you trade when price is an uptrend and a downtrend pattern. So here now, I've given us that price is going up. So what I'll be looking at for is to always buy. What I'll be looking at is to buy when price is to my reserve zone. Buy a particular position. So this is it. If you notice, before price started selling back to my resistance zone, this is a resistance zone. It's acting as a resistance zone. Resistance zones are where the price, where you need to sell a particular price, and a support zone is where you need to buy a particular price. This is a support zone. This is a support zone. And then this is a resistance zone. Then this is a resistance zone. So once price approach to my resistance zone, what will happen is you need to push the price down. So price you need to go down. And when price is going down at a resistance zone, it need to give you some candlestick, some chart patterns. It need to give you some chart patterns because we have chart patterns. So this the most chart pattern that I'm familiar with is the double top, equal low. They call it a double top, or equal. Some call it equal high, but me I call it a double top. Price will have to go back here comes back down again, goes back to this same high. So it wasn't able to break this high. And then what happened? Price went back down again. So once it breaks this low, this is when I can confirm that price is on a downtrend. So I will look for my entry when price trace back to this zone. I'll push the price down. So this is what I'm talking about here. This is what I'm talking about here. This is a high that the price make. Price make a fall high and then push up. It gave us a bearish engulfing candlestick here that pushed the price down. So coming back to this high, it wasn't able to break this high. Instead, it goes back down and then break this here. Instead, it come back down and then break this low. So as it broke the low, what happened? Price started shooting back down. And then shooting back down, it broke this other low again. It broke this other again. So, and then what happened? As it broke the low, it came back again, retraced back to the same low, and then started shooting back down again. What happened? As it shoot back down, it broke this low, and then it broke this low, back, broke this low, and then price retraced back to this low. This low was very strong zone. Price broke this low, and then try to retrace back again, which is this low, and then try to retrace back again. This is acting as a very strong support zone for the buyer, for the sellers to activate and then push the price down. So you notice price, it gave us a different candlestick patterns here. At least you can identify one or two. This is a hammer. It's shooting star. Shooting star is for the sellers pushing the price down. Hammer for the sellers pushing the price down. So we have morning star and evening star here. Evening star here. That push the price down. This is an engulfing candlestick that price down. So price down. What happened? Broke out this low again. Broke out this low again. So this is the same consolidation market I'm telling you. Price it was consolidating at this particular zone. So if you notice this kind of consolidation, what you have to do is to mark out your high and then mark out your low. So you notice price will go to the high, come back to the low, goes to the high, come back to the low, goes to the high, come back to the low, goes to the high, and finally broke it out. When price broke it out, what happened? It retraced back and then started going back down again. See that it retraced back and started going back down again.
Peter, can you mute who is talking, please?
All right, let me check that.
Hey, nonsense, that is bad manners, man.
Yeah, I think I'll mute. All right, I think I'll mute. So what you have to do, this is a consolidation market here. You notice the price I was consolidating at this particular area. So pushing up, going back down, pushing up, going back down, pushing up, going back down. So once you see this kind of move, what you have to do is to mark out this the high and the low. So once you mark out this high, you mark out the low, then you wait for price. What price need to do is to come back, wait for what price will do, whether price will break any of the above. So price came back here, breaking out, break out with the Mariposa candlestick, and then break out here. What's happened? Price try to retrace back here, retrace back inside here, and then shoot back down. It retrace here and then shoot back down. So as it went down here, then news took it up and then it came back down again. See that? So this is a news fundamentals. So we have different kind of traders. We have the fundamental traders. We have the technical traders. So I'm a technical trader. We make use of chart patterns. We make use of candlestick patterns. So why the news? The fundamental traders, they make use of the news. So the news is what comes out every day. At least we have, but we pick out some active news that will always use. So for the fundamentals traders, they make use of news, and this is a news movement. So with news, you can make with news you can make $100 in a day. You can for 5 minutes, you can make $100. You can make $1,000 in 5 minutes. With news, you can make $10,000 with in 5 minutes. So depending on how much you are trading with, will determine how much you are going to make using the fundamentals. So what happened? Price came back up and then went back down. Sold to this level, give us an evening star candlestick pattern that push the price up. So whenever you see all these patterns, they work. So price came back to my support level. This is the support level I told you guys. So price came back to my support level. What's happened? It gave us the candlestick pattern that I'm familiar with. This is an evening star candlestick pattern. So I'm familiar with engulfing candlestick pattern. I'm familiar with the hammer candlestick pattern. I'm familiar with evening star candlestick patterns. I'm familiar with the morning star candlestick patterns. I'm familiar with the spinning top. You see, so I know at least 4 to 5 of the bearish. I know at least 4 to 5 of the bullish that I'm familiar with. So you need to know about the bearish, at least 3 of the bearish, 3 of the bullish, 4 of the bearish, 4 of the bullish, or 5 of the bearish, 5 of the bullish that you are familiar with, that you are trading with. Whenever you see them, it triggers you to buy or to sell, because something always triggers to buy or to sell. So at your key levels. So the determine this price is shooting back. So shooting back to my resistance level. That's why it's creating up move, creating a higher high and a higher low, which is an option move. So price is going to trace back and then continue pushing back up again. So heading back to this high. So price is heading back to this resistance zone because it has rejected multiple times here on my support zone, creating an follow, finally break out, trace back, and then break out the next high, telling me that price still have the room to move to the upside. So that's why it broke out and then give us a doji candlestick pattern here, and then a push up, continue pushing up back. So this is for the GBP, Euro GBP. This is for Euro GBP. So do you have any question to ask? You can start asking your question. I think we have not less than 15 minutes or so for this class to be over. So if you have any question that you have to ask, maybe you don't understand how it works, let me show you now so that you understand it.
So
And
you were to
then
show us how to link the two accounts, the Meta 5 and
the SNES.
yeah.
Okay. So have you downloaded the Meta 5?
Yeah, yeah.
Okay. So I will send you a video of how you can connect it. Or if you have a second phone, because SNS doesn't screenshot. There's a link I sent about how to create an account on SNS. Do you see the link so that you can create an account? Once you create an account, you will let me know in the chat. So I will direct you. Either I will direct you or I will send you a video that will help you to connect it, because I made a YouTube video also that will help to connect it to your MT5. So if you want me to direct, if you have a second phone, because SNS also have they don't screenshot the. So unless you have a second phone that you can use to snap, and then I'll direct you of how you can connect it so that others will also learn.
So I created the two accounts, and when I went to XNext, they asked me to enter the password of my Meta 5.
Okay, the password for Meta5. You went to SNS.
Yeah,
Yeah, this thing, let me see. You say you have created an SNS account.
yeah.
Okay. So did you see anything like a detail? Let me see if I will. Do you have a second phone to send me a screenshot? Maybe I will direct you.
Yeah, I'll do that.
You say?
I'll do that after this.
Okay, so that I can direct you on how to join it, or I will send a video in the group so you go through it. So the video will direct you on how to connect your SNS broker to your MT5. They still have the SNS app. So after you created an account, you can still get your SNS app whether in your App Store or in your Play Store. You can see the SNS app there. You can still download it and then sign your account in. But hope you guys understood the class for today. Or is there any question in the class about the class?
Subsequent question will come, but I want to rewatch the video again because there are some places I didn't get. I recorded this. I want to rewatch the video again, sir.
Okay, okay, okay. That's fine. How about others? Do we have anything or any question we need to ask before the class will be over? I believe we don't have question. And for the candlestick patterns, you download a candlestick pattern as well, or you download Go Forex. So that Go Forex for beginner is going to enlighten you more. It's from the basic to the teach about the basics, it will teach you candlestick patterns. So that is for the beginners.
So what did they mention now? Go Forex and
Okay, let me write it out for everyone.
you
Let's
said
go
go.
for let's go Forex and candlestick. So, candlestick pattern. You see a lot of candlestick pattern there. So there's a one that we call the GVC candlestick pattern. So at least that one explains it more better. Let me write it JVC, JVC, something like this. You see it there. So this one explains it more better. Download it. If you are confused about the right one to download, you can send me a screenshot. I will direct you. So I hope everything is Alright. So the Go Forest is going to enlighten you. It's for the beginners. You see Go Forest for beginners. For Go Forest for beginners. Go Forest for beginners, and then candlestick patterns. You see